2025 is well underway with a massive week this week with key labor market data eyed from the United States. The dollar had a powerful end to 2024. Are we going to see it continuing in this year of 2025? Guys, let's break down all of the macros and the key technicals for the dollar. Hey, baby. Happy 2025. I hope we are all well and truly led. Yes, we're back. We're back, not with just another week in these beautiful markets, but a whole amazing year ahead of us. 2025 is going to be volatile, guys. I can't stress that enough. It's going to be volatile. We saw how we finished, the latter stages of 2024 with that big kick of volatility, the upside pressure. We had our finger on the fucking pulse. We were all over that for that dollar upside because why? We were in tune. Like a lot of the rest of the market, a lot of the rest of the retail guys were not in tune. We were in tune, weren't we? We were firmly in tune with those macros that were driving the dollar, that were supporting the greenback to the upside. When people, I know there's some big players, we'll say big players because I'll be respectful. There's some couple of big influences, decent size, decent traders in a space that, when was it? In November, they were like, the dollar, this is the dollar end of the dollar now. Well, I think when we were at 107-ish, and then I had a few messages, people messaged me like, oh, this person just said, he's going short dollar from here at 107. Is this the end of the dollar rally, Ken? I said, pretty much in plain terms, fuck no. I don't give a shit what this guy thinks. The fundamentals, i.e., the growing economic and monetary policy divergence between the United States and other major economies is huge and is only about to expand even further. Right? Let's just talk about some of the factors quickly before we look at everything technically and speak about other key themes this year. One, data from the United States has been banger after banger after banger, just further reconfirming what we've been saying. When this dollar had been selling off here in July, we've been saying it doesn't matter. Yes, the market's just getting overstimulated, over horny, for these rate cuts as they were back here. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon. And it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it. Because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. At the end of 2023, they were getting overexcited about many rate cuts for 2024. And we had our finger on the pulse and we were ready for that bounce there early from the get-go of 2024, weren't we? We were all over that. So anyway, data in the United States has been good. Labor market, which is a key barometer of the health of the United States economy, is tight. The unemployment rate's still low. Decent amount of jobs are still being added to the economy. Average earnings, what people are getting paid, right? Remember, if people are getting paid more money for their fucking work, what do you think they're going to go out and do when any human, just a typical human being, when they get more money stuffed into their pockets, into their bank accounts, what do you think they're going to do? They're going to go out and spend money. Spend. Stimulate the economy. If people are still fucking spending, businesses are not going to be putting down price of their goods and services. So prices, inflation remains high and sticky. What does that mean for the FOMC? It means they can't keep rushing and cutting rates, because if we rush and cut rates, we're lowering people's costs. If we lower people's costs, bear in mind, these guys are getting paid more money for their work. That's just even more inflationary. Get the point. So that is obviously teeing us up for a hawkish FOMC. I'm getting hot in here, baby. I don't even know why I've got a jacket on. I do know why, because I just nipped out and then came to my desk. Right. As if I don't need this. I don't need this, but here we go. FOMC at the back end of last year, 2024, which they should have done a long time ago. I'm having a massive rant here, but I'm educating you and I'm just ingraining everything just so you're ready for this year. So it's just second nature. The FOMC, as I said to you, remember when they cut by 50 base points? And I said, why the fuck are they cutting by 50 base points? When everything I've just said, how the economy's hot, because they are bowing down to market pressure for those rate cuts. They didn't need to. They need to be cutting rates in a time when growth is expansionary and the labor market's tight and consumers are confident and consumers are spending money. You fucking crazy bastards. All right, I'm going to stop with the swearing now. Let's get overexcited. So, anyway, the FOMC did what they should have done a long time ago. And you saw there was it in December? They cut rates as expected, 25, but then they basically just said, we're not cutting in 2025, essentially. Don't expect us to be cutting consecutively. That's just not going to happen, right? And I teed you guys up for that decision to the T. Everything. And then obviously we've got Trump. All this upside pressure in November. Okay. October and November was the Trump trade. Okay, we had the anticipation in October. Obviously, the facts still coming into play and the buying pressure coming into play on Trump, because Trump's going to be introducing a lot of policies that are inflationary. So remember, I've just gone on this massive rant about people spending money. We're going to have fucking tax cuts, and they're going to go and spend even more. Businesses are going to have costs lowered. It's just going to be so inflationary, which is one of the reasons why the FOMC are just not going to be cutting rates this year. It's very, very unlikely. If they do, they're weirdos, man. They're strange because they're only going to give themselves a problem down the line. They'll have an economy that's running too hot, you know? So Trump is coming into play in all right, let's just talk about the market firstly, dollar technically. Remember I said how we basically form this double bottom 1-2, basically essentially protecting that psychological 150 mark. All right, we had a nice protection there and just formed a bit of a double bottom. Obviously on the monthly, no real signs of slowdown yet. Got big heavy area of supply here at 109. On the weekly, you can sort of see that neckline of that double bottom that we formed. Okay, which was, sorry, let's just double check. Okay, it was here really around 107, 106.50 towards 107. Anyway, structure obviously largely to the north with these higher lows and higher highs. It's such a bullish structure. I think everything played out nicely. You know, flag, breakout, flag here, breakout, flag here, breakout, pennant here, breakout. Obviously now we've got this, we had this top here around the psychological 108.50 area, which we had a breakthrough there on Thursday. And obviously trading was just light anyway, a little bit of a pullback. Anywhere between 109 on the nose, where we're at now, and down to, I'd say, down towards 108.50 max is where we can expect some dip buying for the dollar, in my opinion. Okay. This region technically is where I'd like to see some dip buying. At very, very worst case, we come all the way down to sort of 108.50, 107.50, but I don't think it's going to be that deep. I think from here, maximum. All right. And if you look left, guys, obviously fundamentals are stronger than ever. So there's no risk as to why, excuse me, guys, why the dollar can't be popping into 110 this week. I think the risks are still to the upside for the dollar. I think 110, I'd like to see. Then maybe we get this little period of correction, pullback, subject to further dip buying. And the dip buying will only intensify. Okay, it will only intensify, in my opinion. So now, if we're looking specifically at this week, okay, it's big labor market week, right? This is non-farm payrolls week, right? So all of this is important because it just sort of ties into what obviously I've been ranting and raving about with regards to, you know, risks of inflation to the upside for the United States, because the labor market's been tight. People have been getting paid decent money. As you look here, the average earnings had a decent run there. Look at those. Bam, 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 banger after banger after banger. Non-farm payrolls, still decent amount of jobs being added to the economy. Unemployment rate, you know, ticked higher last month, 4.2%, but that's still low. You got to remember how huge the United States economy is. An unemployment rate of 4.2% is incredible. It's such a big economy. Hence why it's the largest economy in the world. right? One of the reasons, obviously. So we've got this run of labor market data. Obviously, the tone's going to be set on Tuesday with job openings. Still expecting a decent amount of job openings there, right? It's been healthy for quite some time. Obviously, we've had a couple of misses here and there, but ultimately, it's healthy. The amount of jobs being opened. ADP obviously is privately conducts payrolls, but we're still expecting a generally decent number there. Unemployment claims has been low for a while. Like, look at the readings, relatively low. We had a couple of spikes the upside, but relatively speaking, look at that. Still less claims, not that many claims. Meeting minutes, the FMC, we know it's hawkish. It's not going to have a massive mover like obviously the actual decision. It's just a summary of what we already know. No surprises there. Now, so yeah, for me this week, I'd like to see the Dixie continue to push to the north. We've got Trump coming in, inauguration, not next week, the week after. So on the 20th of January, we're expecting him to move quite quickly with policies. Expect a lot of chatter, talk from Trump. I know he's going to be implementing some policies on sort of immigration, potentially start hashing out some guidelines around tariffs with China, Canada, Mexico, maybe Europe. Okay, so there's going to be come January 20th, even ahead of the week, heading into that, we could see a lot of uncertainty for those currencies relating, i.e., AUD, NZD, because China's their biggest two-way trading partner. Canada, obviously, CAD's been hit, was hit quite hard, okay, versus the dollar. It has been for quite a while because of that growing economic. We'll talk about that anyway, but so expect some weakness there. And obviously the Mexican peso as well is going to be vulnerable. Excuse me. Oh, sorry. We're still getting over this nasty winter flu that we had. So yeah, still expecting that uncertainty there for those pairs. Let's just take a look here at what else I want to talk about for the dollar. One moment, guys. Yeah, guys. So that's going to be supportive of dollar as well, despite obviously like the trade war, the uncertainty around that. The dollar's still expected to come out on top, regardless of that uncertainty with trade wars and any retaliation. Dollar still expected to come out on top. It benefits from safe haven flows, despite obviously them being exposed to that as well. The back and forth. Obviously, we've got the supporting factor of the more bullish or the more hawkish FOMC, higher for longer rates this year, especially how they're going to be waiting and seeing to the policies and how quickly Trump implements those. Now, I want to jump over to Euro because obviously Euro is a massive southbound train. So once again, guys, I hope you found value in this video. Make sure if you want more like this, you need to be hitting up that subscribe button and the like button. Drop a comment below if you found value in this. Guys, just as I always say, this is just scratching the surface with the value that I put out on a daily basis via the TFTC community. If you want to really level up your whole trading game, you can check that out. And of course, if you want this level of knowledge that I have, I put it hours of value, of serious value, practical lectures, how it all translates, the fundamental themes, the macros, the key economic data, how it translates onto the charts. I've put that into a bootcamp course. You can check that out as well. But other than that, keep watching these videos. Let's level up 2025. Let's go. Stay lit, stay blessed, and let's get it.